Have you ever wondered what happens when you open a tap at home? You turn the handle. Water comes out. Simple. But behind that simple action lies a massive network of dams, canals, treatment plants, pipelines, pumps, screens, gates, and valves. Now let me ask you a question. When you think about companies benefiting from India's infrastructure growth, which names come to mind? Road builders? Power companies? Construction firms? Probably yes. But have you ever thought about the company making the traffic signals that control the movement of water? Most people haven't. That is where Jash Engineering enters the story. Think of India's water network as a giant highway. Water begins its journey at dams and reservoirs. From there it travels through canals, treatment plants, industrial facilities, sewage systems, and finally reaches our homes. Just like vehicles on a highway need traffic signals and toll booths, water needs gates, valves, and screening systems to control its movement. Without those systems, the entire network becomes unsafe and inefficient. Jash builds many of these critical components. The interesting thing is that nobody notices them. Just like nobody admires the plumbing inside a luxury hotel. Guests admire the lobby, the rooms, the restaurant. But if the plumbing fails, the entire hotel stops functioning. Jash operates in that invisible layer of the economy. It is not glamorous, but it is essential. Now imagine a gold rush. Thousands of people are digging for gold. Some succeed. Many fail. But the person selling pickaxes earns money regardless of who finds gold. Jash follows a similar model. It does not own dams. It does not operate water treatment plants. It does not build entire infrastructure projects. Instead, it supplies critical equipment to all of them. In simple words, it sells the pickaxes. That makes the business more stable than many project-based companies. For years, this was a company that very few people noticed. It quietly kept winning projects, quietly expanded internationally, quietly built relationships with customers, quietly improved earnings, like a mango tree growing in a corner of a garden. Nobody pays attention during the early years. But one day the tree is large enough that everyone notices the fruit. That is exactly what happened here. Over the years, the company expanded beyond India into the United States, the United Kingdom, Europe, the Middle East, and Southeast Asia. It acquired businesses, built manufacturing capabilities, and established a global presence. The story was slowly getting stronger. Then something interesting happened. Growth suddenly appeared to slow down. Revenue growth became muted. Profits declined. The stock corrected. Many investors looked at the numbers and immediately concluded that the growth story was over. But this is where the next mental model becomes important. Imagine a truck carrying valuable goods. The truck engine is perfectly healthy. The driver is ready. The destination is waiting. But the highway is blocked. The truck moves slowly. Deliveries get delayed. From outside, it looks like the truck has a problem. In reality, the road has a problem. Management believes that much of the recent weakness came from external issues such as tariff disruptions, shipment delays, geopolitical tensions, and weakness in overseas markets. The business engine, according to management, remains intact. And then came a surprising quarter. Profitability improved sharply. Margins expanded. The market suddenly started paying attention again. This is where another powerful mental model comes into play. Imagine a doctor looking at a patient's ECG monitor. 1 weak heartbeat means very little. Doctors look for changes in the pattern. One strong reading after several weak readings makes people curious. Not because it proves recovery, but because it suggests recovery may have started. That is exactly how investors are viewing the recent improvement. The important question is no longer whether one good quarter happened. The important question is whether that improvement can continue. Now let's move to what institutions might be seeing. Imagine a large dam. Water keeps flowing into it every day. From the outside, nothing dramatic happens. The water level rises quietly. People passing by do not notice. But pressure keeps building. One day the gates open and a powerful flow emerges. Many successful stocks behave similarly. Business quality improves first. Then earnings improve. Then large investors slowly accumulate shares. Then positive developments become visible to the public. Only after all that does the broader market notice. This is often how hidden winners are discovered. The market rarely rewards a company before the business improves. The business improves first. The stock reacts later. And the public usually arrives last. This brings us to the most important part of the story. The future. Imagine a wedding caterer. Before the wedding season starts, bookings are already in place. The food has not been cooked yet. Revenue has not been recorded yet. But visibility exists. Similarly, the company today has a large order pipeline and significant future opportunities. Those orders still need to be executed. Revenue still needs to be recognized. Cash still needs to be collected. But the visibility exists. And this is where the story becomes exciting. Because the company sits at the intersection of several long-term themes. Water treatment, sewage management, urban infrastructure, industrial water systems, desalination, hydropower. These are not temporary trends. These are multi-decade requirements. Every city needs water. Every industry needs water. Every growing economy needs better water management. And every one of those systems needs control equipment. The company is positioned right at that choke point. But every good story has risks. The biggest risk is not competition. It is not debt. It is not technology. It is execution. Imagine a shopkeeper proudly saying, "I sold everything in my store." Then you ask, how much money did you collect? If customers have not paid, profit exists on paper, but cash has not arrived. That is something investors will continue to monitor closely. So where are we in the story today? Not at the beginning. Not at the end. Somewhere in the middle. The company has already proven it can grow. It has already built credibility. It has already expanded globally. But now it must prove that the next growth cycle has truly begun. Think of it like a spring that has been compressed. The energy is there. The question is whether it expands. If the company converts orders into revenue, improves cash collection, maintains margins, and delivers on its growth expectations, the next chapter could be significantly larger than the previous one. If not, the market may continue to wait for confirmation. And that brings us back to you. The next time you open a tap, watch water flow, or pass a treatment plant, remember this. Behind every drop of water moving safely through a city, there are invisible systems controlling the flow. Most people never notice those systems. Most investors never notice the companies behind them. Sometimes, however, the biggest opportunities are hidden in the parts of the economy that nobody is looking at. And the real question for investors is simple. Is Jash Engineering merely another engineering company? Or is it a hidden gatekeeper quietly preparing for its next phase of growth? The answer to that question will likely determine the next chapter of this story.
Don't forget to like and subscribe.